here's an investment proposal for you. Do you want to invest in a company that has no assets, no employees, and no products and services? Well, hello my friend, this is exactly what a SPAC is. Please insert your dollars right here. Okay, hold up. Let me explain what on earth a SPAC is, why you should care, and why the SPAC king himself, Chamath, this guy right here, is so keen on them. And I'm going to look at all the various different aspects of SPACs, so feel free to skip around all the different parts of the video if you wish. Alright, let's start off simple. What is a SPAC? Well, a special purpose acquisition company, or SPAC for short, is a legal entity created to raise enough capital to acquire another company. So a SPAC is effectively a shell company, meaning that it has no assets, no employees, no products and services, and so on. In other words, it doesn't really even operate as a business, and it doesn't have any of those things yet. And a SPAC is formed by a management group known as sponsors. And a SPAC's entire purpose is to serve as a legal entity for these sponsors to raise money through an initial public offering, or IPO. And the money it raises through this IPO is then used as capital to acquire an existing firm. Now, SPACs have been around for decades, and they've previously had a bit of a bad rap, but they've rapidly increased both in interest and the number of SPACs that have been created in the last 10 years or so. And regulation is even now reducing the possibility of people like you and I getting scammed, and other investors too, which gave SPACs a bit of a bad name. In 2020, more than $83 billion were invested in SPACs, compared to just $13 billion the year before. So last year was an absolute explosion for SPACs. So how on earth did the sponsors even raise the money for the IPO in the first place? Well, they do this by selling units, which are made up of a share and a warrant or partial warrant. And these usually cost about $10. And a warrant is a contract that entitles the buyer of the unit to buy a given amount of stock in the future at a given price, which is obviously hopefully less than the market price at that time. And after the IPO, buyers of these units can trade them in the same way that you and I can trade shares on the stock market. So the unit's market value can go up and it can go down too. Alright, so we've got our sponsors and we know how they raise money. But what actually happens to the money that they do raise? Well, the money gets put into a trust, which is typically invested in money market funds or short-term government funds to raise more capital. Then, a SPAC has really between about 1.5 to 2 years to acquire a company it has its eye on, which is rather elegantly named de-SPACing. If the SPAC goes through with acquiring a firm, it will then merge with that company, also known as the de-SPAC process. And shareholders of the SPAC can then decide whether they want to keep the investments where they are, or if they want to redeem the investments they want to and pull out their money. Continuing to invest means that the value of their shares are going to rise and fall with the market, so you can kind of choose whether or not you can feel like the risk of investing in that stock outweighs the potential rewards. Okay, but what happens if the SPAC doesn't make an acquisition? Well, if after 18 months to 2 years the SPAC doesn't buy a company, then the SPAC is going to get dissolved, and those who invested in the SPAC will typically receive a proportionate value of the trust to the number of shares that they own. Alright, so we know where the money's coming from, we know who's bringing it, we know what the process needs to be, but what is the actual benefits of SPACs? So there's kind of 3 main reasons here. And the first reason is that SPACs are kind of seen as a way of bypassing the traditional IPO process and investing in a company early on. And it also gives investors the chance to buy shares in future at a certain price, which can give them a higher return than if they just bought the share on the market. Second benefit is that there is greater certainty over the price in which you offer the shares, unlike if you do a traditional IPO where the price you set is a little bit more influenced on the market, which makes it easier for sponsors and also shareholders too. And the third benefit is the management expertise that comes from those sponsors, so people like this guy Chamath, can be really interesting to see as a signal to how successful an acquired company could be after it's merged with the SPAC. If it is successful, the share value will increase and investors will see a bit of a positive financial return, which is what we all want. And they may also be able to buy more shares at a lower price by using that warrant that they received as part of the unit when they bought the stock when it was just still a SPAC. So what do the sponsors get out of it then? If everything is riding on them to be able to create the SPAC in the first place, what's actually in it for them? Well, they can reap their rewards very nicely depending upon how successful the SPAC becomes. And they're rewarded in the form of founder shares, which means that sponsors are entitled to buy 20% of the outstanding shares at a heavily discounted price. In other words, sponsors pay considerably less for their shares compared to other shareholders. So if the SPAC is successful, this means they'll get a much higher return on their investment than a regular shareholder like you or I investing in the SPAC will. That's obviously if the share increases in value after they've acquired a company. So there's a lot more to gain as a SPAC sponsor than a SPAC investor, but you also have to put in all the work to make it successful for any of the shareholders to get a return from the acquisition in the first place. And being a sponsor means there's a high incentive to make it work so you can reach the absolute maximum reward as well as pleasing shareholders. Okay, but what does this mean for a retail investor like myself? Should we invest in SPACs? Well, this is how I see it. If you're thinking of investing in a SPAC, there's kind of three main things to think about: the management team, the target company the SPAC's trying to acquire, and the investment risk. And because the SPAC itself is literally a shell company, there's no business there to make a decision on. Therefore, the management team is kind of a big part on the success of the SPAC. So you can do your research into the expertise and the experience of the people managing the SPAC just to give you a good sense of whether it's likely to be a fruitful investment or not. And some SPACs use high-profile sponsors for their management team. For example, Chamath, also known as the SPAC King, is a SPAC sponsor who is a well-known venture capitalist and former Facebook executive. He's also the CEO of Social Capital, which is his very own SPAC too. So people like him give others like you and I the confidence to invest in SPACs because they believe it will run more effectively. Or at least that's the idea. So aside from the team, once the SPAC announces which company it's seeking to acquire, you can then do your research into that company that they're looking to acquire to kind of decide whether or not to keep money in the game or to pull it out. Though of course, there's also no guarantee that the SPAC will be able to successfully acquire that company. Doesn't always happen. So if you bought your SPAC shares after the IPO and you don't want to stick with the SPAC once you know the target company, it's important to note that you'll often be reimbursed with the original IPO value of the shares. This could be lower than the market value that you paid for them, but this is part of the risk in investing in a SPAC. You may feel it's even riskier to keep your money invested than to lose some of your value in the short term. And part of researching the target company is to study the official statement about the proposed merger that the SPAC will give you. And this will include some interesting information like corporate governance methods, historical financial information, and also things like market dynamics. For example, electric car companies are pretty hot right now, and therefore CCIV, which is a SPAC who are looking to acquire Lucid Motors, does that mean it's therefore a good investment? Perhaps. But obviously, all investments come with risk. So if you weigh up your investment options and you're comfortable that you've got enough information and you're comfortable with taking the risk of investing in a SPAC, you've seen the corporate governance documents, you kind of look at the idea of the company that they're going to acquire, it looks good, the management team looks good, then sure, it could be a good idea to take the risk and invest in a SPAC. Of course, there are some kind of key watch outs though, and it's worth highlighting a few of those now. So the Wall Street Journal reported that between 2010 and 2017, SPACs underperformed by 3% annually for the first 3 years post-IPO compared to the broader market. On top of that, the FT, Financial Times, reported that between 2015 to 2019, most SPACs were trading below the value of their original $10 share price, and just over half had made an acquisition. So that's not to say that you shouldn't invest in SPACs, but it's also to say that, an investment is never without a risk. And it's helpful to collect as much information as you can about the SPAC and about the company that they are looking to acquire before making a decision. Plus, just to throw one other thing into the mix, the SEC, which is the US Securities and Exchange Commission, is also recently looking into cracking down on some of the rules around SPACs, which is putting a little bit of a fire extinguisher onto the SPAC market right now. Do I think it's anything to worry about? Potentially. I think let's wait and see, but I wouldn't necessarily be too put off by it. All right, that wraps up a quick look at SPACs. If you enjoyed this video, why not check out one of these two next? And if you've got any questions about SPACs or you want to share an interesting SPAC that you found, do let me know in the comments below. Otherwise, I'll speak to you soon and have a great rest of your day.